Morning, this is Horizon's Middle East and Africa. Our top stories this morning. Iran confirms that the country's top security official, Ali Larijani, has been killed in an Israeli airstrike. U.S. President Trump abandons efforts to enlist allies to help with the war with Iran, blasting countries for rejecting his appeals. And global stocks rally for a third day, and oil sinks as investors look past near-term geopolitical tensions, despite the war showing no signs of easing. It's just gone at 9 a.m. across the Emirates. I'm Joanna Bersachi in Dubai, very much in the thick of the third week of this war in Iran. But I will tell you, it's interesting to see that global markets really seem to be brushing off the latest developments and the fact that things are not really showing signs of letting up at all. The past couple of days, we've seen the U.S. markets end up in the green. The handover from Asian markets also pretty positive as well. And attention now focusing on the slew of central bank meetings that are coming this week. We've got the Fed today, obviously a big one. It will be interesting to see whether their reaction function has changed in light of the recent oil and commodity pressures. And at the same time, we've got the ECB, Bank of England, all of those to watch out for, and the Bank of Japan too. So there's still a lot to get through this week in terms of market moving decisions, potentially as well. So S&P futures up 0.4% today. The USD slipping actually the last couple of days, even though since the inception of the war, the theme has been one of dollar benefiting. It's up more than almost 2% since February 28th. So apart from the last couple of days, it has actually been perceived to be one of the few safe havens out there. 10-year yields drifting, well, we got as high as 4.2. Now we're back down to 4.18. So we're about 2 basis points lower today. And of course, into the Fed, we have basically about one rate cut priced in by the end of this year. And our own economists are not expecting the dots to change. We're still expecting the SEP dots to project one interest rate cut for the remainder of 2026. But we'll see whether there's any hawkish language that emerges from that press conference with Powell. And then Brent, take a look where we are now. We're still in triple-digit figures, $101, just shy of that, and down about 2.4% today. Again, keeping a close eye on all the developments around the Strait of Hormuz, the fact that Iran has allowed a limited number of vessels to pass through, but also another breakthrough overnight with Iraq signing a deal with Kurdistan to resume some of the exports via that pipeline in Turkey. So that is allowing for a partial offset of some of the production cuts that have come through from Iraq, but it's seen as perhaps a bit of a supply boost to a market that is facing physical disruption in this part of the world. And then switching over, speaking of oil and its ramifications, one specific product that got attention yesterday is diesel, and diesel prices in the U.S. now above $5. So this is quite a significant uptick, as you can see, pretty much a vertical line since the war started. And that also is going to be a big focus for U.S. consumers, obviously something the Fed has to take into consideration, and may even be a hot button topic as we head into the midterms in the U.S. later this year as well. So $5 diesel, actually even above that in the U.S. right now. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. Min Min.
Hey, Jomana, is a picture of stability here in Asia. Third day of gains here, led by the tech heavy indexes. Again, Kospi surging 4%. This is also supported by the swift reaction by the Korean government, pumping in 1.5 trillion won, I believe, in financial aid for the companies whose supply chains are affected by the Iran war. Hang Seng is pretty flat at the moment. There is a bit of market jitters here in Hong Kong as we await Tencent's earning and Alibaba's earnings tomorrow as well. You flip the ball, we're tracking some of the chip stocks in Asia because Nvidia's Jensen Huang had mentioned that his company is accelerating the production of H200 chips. Reuters also reporting that the Chinese government has apparently approved licenses for some companies to buy from Nvidia, although this has not been publicly revealed officially by the government. But here you can see earlier some of these chip stocks were down. Now it's flipping to positive, but there's perhaps a bit of that substitution effect with the H200 now approved approved in China. But some of these open-claw linked stocks, though, are surging by double digits. That's after Nvidia's Jensen Huang also mentioned that open-claw could be, or he said rather, that it's definitely the next ChatGPT. And so there's a lot of optimism surrounding some of these tech stocks here.
Min, thank you so much. Min Lo in Hong Kong. Now, our top story for today. Iran has confirmed the country's top security official, Ali Larijani, has been killed in an Israeli airstrike. The 67-year-old veteran politician helped lead Iran's wartime effort against the U.S. and Israel. Now, this comes as U.S. President Donald Trump gives up on efforts to enlist partners to help end Iran's de facto shutdown of the Strait of Hormuz.
We're not ready to leave yet, but we'll be leaving in the near future. We'll be leaving in pretty much the very near future. But right now they've been decimated from every standpoint. And again, we've had great support from countries in the Middle East, great support, but we've had no support from, essentially, no support from NATO.
Paul Wallace, Bloomberg's managing editor for MENA Economy and Government, joins me now. Paul, let's start with the killing of Ali Larijani now being confirmed by Iran. How significant is this?
Hi, Jumana. Well, it's certainly a big blow to the Islamic Republic. Ali Larijani, who was 67, was an establishment figure for decades. Israel called him the de facto leader of the country, and while it's difficult to tell whether that's completely accurate, he was certainly calling a lot of the shots, and his profile had grown even further since last year's 12-day war between Iran and Israel and then the U.S. in June last year. So he was a very senior figure, former IRGC commander, and to some extent, at least, he was commanding Israel's military actions. He had sounded very sort of bellicose since the start of this war, and when he did make statements in public, he said that that Iran was not going to negotiate with the U.S. and didn't want to. He struck a note of defiance last Friday, which was the last time he was seen in public, when he walked in broad daylight in Tehran with thousands of other people for an annual event. But certainly the fact that he's been killed by Israel is a blow to the Iranian government, and its military has vowed to avenge his death.
Well, this is what I was going to say, Paul. For anyone who was perhaps hoping that this would lead to some sort of an off-ramp or de-escalation, what we've heard is the head of the IRGC threatening to retaliate and ongoing strikes throughout the course of the evening on various Gulf states. Yes, so we've seen that. And there is also a line of thought that rather than providing an off-ramp for the warring parties, his death could do the opposite. His death could make it even more difficult for the U.S. and any mediators in the Middle East to find someone within the Iranian government who represents all the factions, or at least has all their backings. It's difficult to tell at this stage, but as you've just noted, for now the attacks continue, and in Dubai, where I am, it was a busier than usual night, at least in the area where I'm staying, and we had at least 2 missile alerts and quite a few sounds of interceptor missiles exploding. Yeah. Paul, thank you so much. Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. Thank you. Let's pick up the conversation and get more analysis from Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Ryan, I'm really interested to hear what you think the taking out of Ali Larijani actually means for the regime at this point, and also for the potential for there to be some sort of a diplomatic off-ramp. And I've read a lot of commentary overnight suggesting that Ali Larijani could have been a key figure for the U.S. to speak to, but obviously now he's out of the equation. There are less and fewer alternatives.
Yes, and I think that it deepens the uncertainty as to who exactly is in charge within the Islamic Republic right now. We have nominally a new supreme leader, Mojtaba Khamenei, Ali Khamenei's son, who supposedly is calling the shots and is issuing statements, but he hasn't been seen in public. He certainly doesn't seem to be in full command of the system. And it looks like right now Iran is running still on emergency mode, where individual leaders' agency has been reduced by them using these sort of off-the-shelf plans that they've been developing, particularly since the June war of last year showcased Israel's ability to assassinate key leaders. So it looks like Iran is running on defensive autopilot, so to speak, where it's carrying out attacks under the aegis of the IRGC, carrying out plans that they had made a long time ago. And assassinating a single leader won't change that until Iran's political establishment, until some sort of conditions emerge where they believe they've caused enough damage to the U.S., to Israel, to the Gulf Arab states, and the global economy to deter the next war.
So, I mean, if this is seen as strengthening the hand of the hardliners, where does the war go from here?
I think we continue to see calculated escalation up a pre-approved list of targets. And I've said before in other places where I've been surprised that the Iranians have chosen not to swarm attack strategic targets like they did with Abqaiq in 2019, where there was significant destruction to Aramco back then. They're still capable of carrying out such strategic destruction of near-abroad targets, particularly on the eastern half of the Arabian Peninsula, and they've chosen not to, and I think deliberately, in order to continue to signal that their current strategy is about disruption rather than destruction, but they could shift that over at any time. And these continued assassinations of their top leadership suggest that hardliners will come to power at some point that will decide that strategic destruction is the best way for them to send the message and to reestablish a measure of deterrence against their militarily superior enemies in the United States and Israel. And that strategic destruction could be energy facilities, of course, but it could also be something more catastrophic for the region like power plants or desalination facilities.
Okay, so then at what point would the Gulf states' stance shift from defense to something more proactive?
I think we've already seen some proactive measures, with the Qataris shooting down Su-25s. The Emiratis are suggesting that they will support an American mission to reopen the Strait of Hormuz. That may not mean that Emirati ships are necessarily involved, but it could mean the Emiratis are opening their airspace and allowing for their military facilities to be more directly involved in that U.S. mission. So we're seeing a slow creep towards moving in the direction of supporting the American mission more openly. I think that is as far as the Gulf Arab states writ large would like to go to, with some exceptions. I think places like Oman would like to stay even away from that. But if we do see a significant strike in a Gulf Arab state that results in civilian casualties or a humanitarian crisis, I think the political dynamic would change overnight, and that the countries would then be pushed towards taking on an offensive position, including strikes within Iran itself.
Yeah, the stakes continue to move higher. Ryan, can I just ask you, it is day 19 of the war. We're tracking it day by day. It's really difficult to have visibility on where this is going to go, but what do you think is the most likely way the war is going to end, or we're going to see an end to the fighting, at least?
Well, we'll look at some alternative futures here, and we'll say baseline is still a few more weeks, somewhere around Passover. Israel and the U.S. exhaust their target list, realize that they won't be toppling the Islamic Republic anytime soon, and Trump calls a ceasefire, and the Iranians abide by it. While that wouldn't be exactly perfect security, it would allow a normalization of conditions throughout the region. But we need to keep in mind that near-term kind of baseline scenario could readily be upset by new developments. For example, as leaders within Iran continue to be assassinated, hardliners may conclude that they haven't caused enough economic damage to the global economy to keep that next war from happening. The Iranian assumption now has to be that Israel and the U.S. are going to pause the conflict, not actually end it. And in fact, we've seen Iranian officials sort of suggest that what they really want is a permanent truce. They don't want a temporary ceasefire on the prelude to another war. And the one way to do that is to cause more damage to the global economy by keeping the war going going for a few more weeks, even a few more months in terms of disruptions. After all, we saw the Houthis, which are technologically much less advanced, able to disrupt the Red Sea for a significant period of time. If the Iranians decide to carry out that low-level harassment campaign after a ceasefire, it'll be very tricky for the U.S. and the Israelis to respond to it, let alone to offset that economic pressure if it's lasting.
Yeah, and yet global stock markets brush off those concerns. Ryan, thank you so much. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Thanks for joining. Now for a look at some of the other stories we're following today. A top counter-terrorism figure and staunch MAGA Republican has become the first high-profile Trump administration official to step down in protest of the war in Iran. The director of the National Counterterrorism Center, Joe Kent, claims Israel misled President Trump into believing there was an imminent threat from Iran. In a post on X, he said he could not support a, quote, a war that serves no benefit to the American people. The Pentagon is planning to mass-produce cheap drones it copied from Iran. The U.S.'s Lucas drone was created by reverse engineering Iran's cheap and deadly Shahed system and are estimated to cost roughly $55,000 each. The one-way attack drones have been deployed in the current conflict with the aim to replace more expensive cruise missiles, which can cost millions of dollars each. And up next, Emirates NBD tells us the scenarios they have mapped out for markets if the Iran war continues for longer than expected. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A rally in global stocks extended into a third day as investors looked past near-term geopolitical tensions and sought signs of stability. Joining us now is Maurice Gravier, Wealth Management Group CIO at Emirates NBD. Maurice, I feel like I'm almost operating in two parallel universes here. We've got the day-to-day developments of the war. It's day 19 of the war. I've been speaking to many geopolitical analysts, and the prognosis is that this could probably go on for a few more weeks, and Iran are going to continue to try to inflict economic costs. At the same time, global stock markets don't seem to be fussed at all. And you look at the price action the last couple of days, trading in the green, the main concern obviously being some of the language coming out of the Fed today. What are global investors missing, you think?
That's a very interesting question, and you're right. It's we are surprised by some developments. Well, some developments are not intuitive to see that the U.S. stocks are down pretty much 2% since the war started, and why gold is down 5%. It's a bit weird. I wouldn't say that markets are necessarily missing something. They are playing this idea that it should be a short conflict. It's already, as you said, day 19, so it's not that short, and we are at that camp. They may be underestimating the risk in case the conflict is protracted and escalates further, because if we are in the idea that it lasts months and not weeks, I mean, between oil prices and supply chain disruption, that's the catalyst for a global recession without the benefits that you have of a global recession and inflation. So maybe they are missing the minor risk. We put 40% probability of a protracted conflict, but we are in the camp 60% probability that the conflict will not last longer than a few weeks and as short as possible.
Yeah, and Maurice, we continue to track the movements or lack of movements around the Strait of Hormuz, the ongoing attempted strikes on energy infrastructure. Of course, interception rate has been very, very high. But with all of that going on, you have oil trading around $100. Is that a manageable level, do you think, for the global economy, at least in the short term?
In the short term, it inflicts some pain. And first, you're very right to highlight the interception. I mean, we are very well defended, and that's also a message for maybe for your global audience that I am at the office and things are fine. $100 is not a sustainable level for the global economy. There's no question about that. And if you look at the oil curve, markets are, by the way, playing the fact it's in a massive backwardation. So markets are playing the fact that it won't last forever. Again, the risk is a protracted conflict with with I would say, sustainable damage on the energy infrastructure. It's not the case yet, and the possibility to, full storage damage on production, the impossibility to ship. We don't think that it will happen, even if Iran's strategy is clearly to inflict an exorbitant cost of the conflict to the global economy. And
Have you changed any of your portfolio allocation, though, since before the war to now, just in light of some of the concerns that we could have on the global impact, especially as it pertains to energy and supply chains?
Yes, absolutely. We trimmed down the risk in our portfolios. We call this year eyes wide open. Last year was different. It was the winds of change. We started the year fully invested with an overweight in gold and stocks from emerging markets and also emerging market debt. It worked very well. And just last week, we decided to go on both gold and emerging stocks from overweight to neutral. On gold, it's very interesting. It acts a bit like a risk asset currently because it's crowded. And we also have the fact that financial conditions are tightening. I mean, interest yields are higher, so it's not the asset to own. So we went to neutral on these two, which means we're overweight 3% cash now, neutral on fixed income, slightly underweight in stocks with a preference for emerging markets, and now neutral gold and real estate.
Yeah, and how are you feeling about the outlook for U.S. markets here? Even before the war kicked off, there were some concerns swirling around too much hype in artificial intelligence, then concerns around software, the disruption that AI was going to cause there, then concerns about private credit exposure to many of these software firms. And putting it all together, it seems like there are many headwinds that would derail the stock market rally. And yet, as I mentioned, we continue to go up.
Well, I may surprise you, but within developed markets on which we're underweight, the US remains our preferred region. Well, is our preferred region for a few weeks. There are tactical reasons because in this phase of escalation, US assets do better than others. It's true for the dollar as well. There is also, frankly, the S&P 500 valuation has derated because we have earnings going up and we are still slightly down year to date on the index. When it comes to software, of course, there are disruptions from AI, but it's one of the areas where we look for specific opportunities. We think that some enterprise software, they are much more than just code. I mean, they are also an ecosystem. And when it comes to, for example, in the Magnificent Seven, there are two names that we like very much. And apart from that, if you look at the sector hierarchy this year, I mean, it's about, forget energy, but it's, energy, materials, industrials, that's all the sectors that benefit from the AI build-up, and it doesn't stop. So we are not that worried about US stocks, except if we go in the nightmare scenario of a very long conflict escalating in both time and involvement. That would be an issue for everything. At this stage, the US, I mean, we prefer the US to Europe, typically. We are, within developed markets, we overweight US, neutral Japan, and underweight Europe.
Maurice, thank you so much. Maurice Gravier, Wealth Management Group CIO at Emirates NBD. Always a pleasure to chat to you. Now for a look at some of the other stories we're following. Iraq has agreed with Kurdistan to resume oil exports through a key pipeline in the semi-autonomous region from today, offering some relief to strained global supplies. It marks a boost for OPEC's second largest producer after the closure of the Strait of Hormuz forced output cuts. The pipeline delivers exports from the Kurdistan and Kirkuk fields to Turkey's Mediterranean port of Ceyhan, far from the conflict-hit Persian Gulf. Japan's prime minister faces a diplomatic balancing act as she meets U.S. President Donald Trump this week, with tensions over the Iran conflict taking center stage. Tsunade Takaishi says she'll lay out what Japan is legally able to do when it comes to sending battleships to the Middle East. Trump had called on allies to deploy warships to secure the Strait of Hormuz before backing off the demand. And the EU will restart ratification of its U.S. trade deal with a parliamentary vote tomorrow, ahead of final approval by member states. The bloc has repeatedly stalled ratification, citing U.S. threats to seize Greenland and uncertainty after the Supreme Court ruling on tariffs. The progress comes despite the U.S. opening fresh investigations into EU trade that could produce additional tariffs. And a look at equity futures as we head into that key Fed meeting coming up later today. And it is a sea of green out there. S&P futures up 0.4%. European markets also quite robust this morning, up 0.7% as well. But coming up, as oil and gas sink this morning, we discuss the drivers of the energy market with Livia Gallarati from Energy Aspects. That's coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Iran confirms that the country's top security official, Ali Larijani, has been killed in an Israeli airstrike. U.S. President Trump abandons efforts to enlist allies to help with the war with Iran, blasting countries for rejecting his appeals for assistance to end the effective closure of the Strait of Hormuz. And global stocks rally for a third day, and oil sinks as investors look past near-term geopolitical tensions despite the war showing no signs of easing. It has just gone 9:30 a.m. across the Emirates. I'm Jumana Versace, in Dubai. Another positive handover from Asia-Pacific indices today, up 1.9%, the MSCI Asia-Pacific. So pretty robust as we head into the U.S. session. It is a big day today. We've got the Fed meeting coming up, and this is the first opportunity for us to hear from the Fed Chair Jerome Powell since the war started 19 days ago, keeping close eye on the ramifications more broadly on energy markets, commodities, and supply chain. So that clearly could mean some inflationary pressures down the track that they have to think of. S&P futures, though, up 0.5% this morning, building on from gains yesterday. The USD is slipping a little bit, though, down 0.1%. So back-to-back losses for the greenback, though since the inception of the war, the dollar is up. 10-year yields down 2 basis points today, 4.18 is where we're at. The market is pricing in about one rate cut in totality for 2026. We'll see whether the guidance changes, whether the dots move, or whether indeed one of the takeaways from the press conference, or indeed the language that comes out today, leans more hawkish out of the Fed officials as well. And then Brent, always keeping an eye on where oil is trading. We're still hovering at three-digit territory, just shy of $101 here, but still slipping about 2.7%. overnight. And some of that can be attributed to a deal that Iraq and Kurdistan cut to allow for the passage of some of the Iraqi oil through that pipeline that is directed towards Turkey. But I will say, though, we're keeping still a close eye on the significant output cuts that many of these OPEC producers have had to make throughout the course of this war. In the case of Iraq, it's something like 3 million barrels per day that they've had to take off the market. So partial offset with the restoring of this pipeline. But anyway, you're seeing an impact on Brent this morning. It is down 2.7%. And then switching over and talking about the perhaps broader ramifications on other products linked to oil, take a look at diesel. So this is the price that U.S. consumers are now seeing. So it's trickled down to more than $5. So this is the average price, the retail diesel average price in the U.S. now. Levels, of course, not seen since the Russian war, the Russia-Ukraine war. And that vertical line is just a reflection of how quickly prices have gone up. And not just gone up, but also being translated to what U.S. consumers are paying at the pump as well. So $5 diesel got a lot of attention yesterday, and clearly something else that the Fed needs to think about, and also potentially the Trump administration needs to think about, as affordability is one of the key themes going into the midterms this year. Okay, let's switch back, though, and check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us. Min Min, run us through it.
Hey, Jumana, we're just taking a quick look at FX and rates today because, as you said, we have a whole slew of central banks meetings coming up this week. The next one, the earliest one coming through is from Bank of Canada overnight in Asia timing. And then we have the Fed, we have the BOJ tomorrow, and then the BOE and the ECB. But we have been seeing a bit of dollar volatility heading into the FOMC meeting. The yen is strengthening just a touch ahead of the BOJ meeting, but most of these central banks are expected to stand pat yet. Their hands are tied because of the Iran war, so it will be important to pay attention not so much to what the banks do, but what the commentary is coming out of these central bank meetings. And you flip the board, you take a look at bond yields as well, mostly under pressure across the board, which suggests that investors are pricing it slower for longer growth, and maybe the inflation fears is also moderating just a little bit.
Min Lo, thank you so much. Min Lo in Hong Kong. All right, well, oil has been dropping this morning, as we were just talking about, as Iraq signs a deal to resume exports via Turkey that would avoid the Strait of Hormuz. Plus, the U.S. has stepped up efforts to force the reopening of the key waterway. Natural gas futures also sinking. For more, joining us is Livia Gallarati, head of global gas at Energy Aspects. Good to have you with us, Livia. I want to focus our conversation on the gas side of things. And if we go back to the early days of this war, one of the big events that caused a significant amount of turbulence for TTF markets was Qatar Energy announcing the halt of their production. And we know that it accounts for about 20% of the world supply of LNG. If you look at where Dutch TTF prices are trading right now, how much disruption is it actually accounting for?
That's a great question. And I think there is some disruption that is factored into the price. Obviously, you've seen a big rally in the last few weeks in prices for gas overall. I would say that maybe the full extent of disruption that is our base case at Energy Aspects is not currently reflected in the price. We think TTF at front month prices could rise all the way to 60 euros. That is because we think traffic through the Strait of Hormuz is not going to resume, at the very least, before the end of the month, maybe even longer. And we think the recovery from whenever it does resume will be very slow and uneven.
Okay, so this is something I wanted to ask you as well. How easy is it to switch the taps back on, so to speak? Let's say, for whatever reason, things return back to normal tomorrow with the Strait of Hormuz. How long will it take for the supply, the gas supply that was taken off the market, to return back to pre-war levels?
It's not so easy. It really depends on the status of the facilities, the LNG liquefaction facilities at the moment, whether they are fully shut in or whether they have just sort of lowered utilization. From what we can see from satellite data, at the very least, the Ras Laffan facility seems to be fully shut down. There may be some trains on the Qatar gas side that are operating at minimal rates, and it seems to be changing which trains, so they're kind of circulating between certain trains. So that might make things a little bit easier when they do have to restart. But our assessment at the moment is that it would take roughly 2 weeks to bring back liquefaction production at the Qatari facilities.
Yeah. And you see in your notes around 80% of Qatar and UAE LNG exports typically head to Asia, 80%. How easy is it going to be for those Asian buyers to find alternatives? Indeed, are there alternatives available?
They certainly have been finding alternatives for now. I would say generally, most of the Asian buyers that are exposed to the loss of Qatari volumes have been managing with temporary measures that range from increasing tenders for spot supply from both the Atlantic and the Pacific Basin. They are pulling more cargoes from the Atlantic Basin that were otherwise destined for Europe. We're definitely seeing that happening from both the US and West Africa. And there are some demand side measures that are being put in place, like fuel switching to coal, as well as prioritizing residential demand, for instance, over industrial demand.
Yeah, that is interesting, especially the switching from gas to coal. Let me ask you about Europe's vulnerability here. There's been a lot of talks about the fact that the inventory level in Europe is also quite low as well. Walk us through how you see it panning out in terms of Europe's ability to fill up their own storage and also lean on alternative sources that aren't stemming from the Middle East.
Yeah, the main problem for Europe at the moment is Asia pulling on that Atlantic basin supply, as I was mentioning before. So the longer that goes on, the more at risk Europe will be in terms of its ability to have comfortable stocks level. Now, the good thing is we are at the end of winter in Europe. Temperatures haven't been particularly cold in the last few weeks, so that does help in terms of demand side management. We're also seeing pretty strong hydro in terms of power generation, so all of those things are helping. And assuming the transit through Hormuz recovers within a couple of weeks, we think Europe can still reach the end of next winter with comfortable stocks level. Now, the caveat there is that it may go on for longer, the disruptions, as I was mentioning before. So that will be a problem potentially for European inventories, and hence why we're a bit bullish on TTF prices at the moment, at least at the prompt.
And I'm not sure whether this is part of your remit, but I do want to ask you about helium as well, because that's come up in conversations as it pertains to semiconductors and gas. That gas is used during the processing of semiconductors. It's been having a knock-on effect to some of those Asian manufacturers. How do you see the outlook for supply disruption in helium markets on back of what we're seeing right now with the closure of the Strait of Hormuz?
I'm afraid I have to disappoint you. Not exactly my area of expertise on this point.
Okay, no worries. But let me just round up then by asking you, more broadly, is it fair to say that as long as the Strait remains closed, which is also the takeaway for oil markets, we're going to continue to see upward pressure on nat gas prices? Is that fair to say?
That is our base case. I think that's fair to say. There is a lot of volatility in the markets in general, both on oil and gas, that is keeping some participants away. I would say particularly for oil, given the backdrop of oversupplied markets going into the crisis, there's a few people that are very reticent to go long. But if the disruptions go ahead for a few more weeks, as we are expecting, yes, the pressure should be going higher in terms of prices for both commodities.
Livia, thank you so much. Real pleasure to get your insights on some of these global gas dynamics. Livia Gallarati, head of global gas at Energy Aspects. Now for a look at some of the other stories we're following today. BHP has appointed Brandon Craig as its new CEO to seek growth in copper and potash while managing a slowdown in iron ore. Craig replaces Mike Henry and will take on the role from July the 1st. This comes as the company faces plateauing Chinese demand for iron ore, which makes up almost half of its earnings. Australia's biggest gas producer, Woodside Energy, has appointed Liz Westcott as Chief Executive Officer. She's been acting CEO since December and replaces Meg O'Neill, who has taken the top job at BP. Westcott takes charge as the company stands to benefit from soaring gas prices triggered by the Iran war. And coming up, a growing cash crunch is forcing Nigerian power producers out of business. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nigeria's power sector is under growing strain, with a number of producers shutting down as a deepening cash crunch ripples through the system. Power suppliers say they were owed more than 6 trillion naira as of the end of February, leaving them unable to maintain equipment or pay for gas. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Jen, this seems like a pretty severe crisis. Nearly half of Nigeria's power plants are offline now.
Yeah, of course, Jumana. And I think those offline plants really illustrate the severity of the issue, which many people are describing as critically under strain, as you were just pointing out there. And really, the issue is around some of these financial debts that are owed to the generation companies. But the reason why we are seeing a number of these units offline is because they cannot afford fuel or maintenance of these plants. And just to give you a sense of what that really looks like on the ground, Nigeria, as we know, has more than 200 million people, and they're relying on a grid that's producing about 4,000 megawatts. And so really this illustrates just how dense it is and how strained a number of the population is. And just for comparison's sake, South Africa, which is just about a third of the size of Nigeria, has about 52,000 megawatts of capacity. So the blackouts are largely, as we can see there, as a result of this gap that we are seeing in the market there. But what we are hearing from the producers is that the shutdowns are not deliberate. It is just because they cannot afford to keep some of these units online. From what we've heard from the government at this point, they are hoping that they can turn this around and hopefully bring up some of the debt repayments, put some of these power plants back online, and over time potentially reform some of the pricing plans so that they're not stuck in this situation. But really, the focus is getting some of the power plants back online so that more of these Nigerians can be connected to the grid.
And Jen, for those of us who are not familiar with the context, why has debt jumped so much across the power sector? What has been the catalyst for this mounting debt?
Well, a lot of the issue, Jumana, is across the supply chain. So if you take a look at what we're hearing from generation companies, and you were just pointing out there, they are owed a substantial amount of money. You were just signifying it there, about 6.8 trillion naira, which equates to about $4.9 billion. That has grown since 2015 and continues to grow based on the data that Bloomberg has collected over the past few months. Now, the generation companies are waiting to get paid. That therefore moves further downstream to the suppliers, which are supposed to be transporting some of these products. They say that about 60% of that amount that I was just pointing out there is owed to them. So the strain is really across the supply chain. What I would mention, though, and we have been hearing from the government more about this, they realize the severity of the situation. They're planning to raise about 4 trillion naira, or about $2.9 billion from the domestic capital markets. Hopefully that plugs some of that gap, but clearly it is still rising, as we can see, by the day. So unless they do raise enough money and again, in turn, long-term rearrange the pricing structure, they're going to continue to see this being an issue for the citizens and also for the economy.
Jen, thank you so much. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Now for a look at some of the other stories we're following. Nigeria's Zenith Bank is planning a listing on the London Stock Exchange in 2027 as it looks to expand internationally. The move would make it the second Nigerian lender to list in the UK. It comes as Nigeria's biggest lenders boost capital buffers and pursue growth opportunities at home and abroad. Ghana's economy picked up pace in the fourth quarter of 2025, with growth rising to 5.8%. The expansion was driven by strong performance in services, particularly in information and communications, alongside gains in gold output. The Democratic Republic of Congo has indicated it is set to approve U.S. firm Virtus Minerals' purchase of copper and cobalt miner Chemaf. It is a deal that will help bolster partnership between the U.S. and the African nation. Bloomberg understands that Congo's mines minister notified Virtus last week, and that the state is giving the green light to the agreed takeover. Virtus and Chemaf declined to comment. And coming up, Nvidia CEO Jensen Huang says the company is restarting H200 production for China after securing U.S. licenses. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Nvidia is firing up production of H200 AI accelerators for China. The CEO, Jensen Huang, says the company has secured licenses for many customers and is restarting manufacturing for a market once blocked by U.S. export restrictions. For more, we're now joined by Bloomberg Asia Tech correspondent Annabelle Jeweler as well. Belle, I mean, the last couple of months we've been talking about Nvidia and their earnings. One of the big question marks has been China, but clearly now Nvidia are getting this huge boost with a potential big market opening up to them.
Yeah, it's really interesting because, as you said, when it went back to their earnings just several weeks ago, the company was saying that essentially they had no presumptions around revenue from China. But we had the GTC event to kick off the week and of course, Jensen Huang giving a couple of different presentations at that. But overnight, really the big takeaway was around the licenses for China, because we understood maybe there was perhaps one in the works. But now he's saying, as you said, they've got several or lots of them on the way. And so it does tell us that maybe there is actually a bit of progress on the reopening and the sales possibility or sales channel to mainland China. This is the H200 chips, of course, from the Hopper series, essentially, that have been greenlit by the US administration for sales there. There was always that big question of yes, the licenses, but also the demand for its products, or whether Beijing would essentially approve them. But it is a step forward, and you're certainly seeing that reflected. I mean, this is some of the Chinese names you're seeing here at the top. So they're a little bit mixed in trading today. But if you were to look at the Korean, the Japanese players that are very much exposed to the Nvidia story, they are really leading some of the big gains in the market. So yes, working to re-establish sales, it seems, of its AI processors of China right now.
Yeah. Okay, so some of the stocks that are linked to the Nvidia story, we're seeing the reaction there. But another big set of earnings coming up today. We've got Tencent Q4 earnings. What are you watching out for?
Yeah, this is going to be a really major one for the market, and generally we actually have seen the market moving downwards actually following these earnings over the past few quarters. But at the same time, we are looking at the fifth straight quarter of double-digit revenue growth for the business. So net income is expected to come in around 55 billion yuan. That's down to essentially its core gaming and its advertising business that have been really the big drivers, continued drivers for Tencent. It's interesting though, because even though you've got those two core interests, where we're going to have most of the attention actually comes down to the AI story for Tencent instead, because we've actually seen them introducing several signature products just over the last few days. So looking at essentially tapping what's been a lot of enthusiasm. We've been discussing perhaps OpenClaw on the show, but more of this focus on agentic AI agents. And Tencent is really well positioned in this space because they've got, of course, their signature WeChat. That's sort of like the equivalent of WhatsApp in mainland China. But essentially, they're able to integrate that AI agent into WeChat and into other functions like hailing a ride, booking restaurants, for instance. That's, again, according to people that are familiar with the matter, but certainly speaks to the progress that Tencent is making in this space. So will be a good one to watch. And you've seen that interesting to see Alibaba, given you've got Alibaba earnings coming up later this week. And that's another business that's actually really been struggling perhaps a little bit more versus Tencent to monetize their major investments they've made into AI.
Bloomberg's Annabelle Jewelers, thank you for running us through what to expect, and Tencent and a little bit of Alibaba as well. Okay, I'm going to leave you with a snapshot of how equity futures are trading as we head into the European session. It is green on the screen, S&P up 0.5%, European markets up almost 0.8% as attention now turns to the Fed decision later today, and of course the ongoing war in the region. That is it for Horizons Middle East and Africa.